Welcome back. You're watching Market Fatafat right here on ET Now, a show where we get you all the stocks that are buzzing based on news flow and technicals. Talking about technicals, now we have Dhwani Patel joining us on the show. Very good afternoon to you, Dhwani. Thank you so much for joining us on ET Now. And firstly, let's talk about Indigo. How do you see this particular counter performing on the charts of late? Because you have a lot of news flow actually impacting the stock performance as well. You'll also have the earnings. But on the short-term trajectory, how is this one looking to you?
Over here on a short term is looking good to me. One can buy in at current levels. What interests technically over here is that stock has made a bottom over here at 23.30, after which we have seen the stock moving upwards. Recently also we have seen a downward sloping trendline breakout and also a positive crossover of short-term moving averages. From current level one can go long into it. Target that one can look up at is 2730, and the stop loss that we need to maintain is 2570.
Surely keeping an eye out on those levels for Indigo. Let's move on and talk about SJVN. Why is this one in focus? And today we've seen the stock actually jumped up and surged as much as 2% in trade, now trading with gains of 3% as well. And why is that so? Because the company bagged a renewable power project for around rupees 600 crores in Rajasthan. Now SJVN subsidiary, that is SJVN Green Energy, was the company that actually received the letter of award at a tariff of around 2.62 rupees per unit for the development of 100 megawatt of solar power projects, that is in Rajasthan Urja Vikas Nigam in Rajasthan. The solar project will be developed on a build, own and operate basis, and the tentative cost of this project, like I mentioned, is 600 crore rupees. Furthermore, the project is expected to generate about 252 million units in the first year itself, and cumulative energy generation over a period of 25 years would be somewhere around 5,866 million units. On the back of this order, 600 crore order win that the company has got, a company subsidiary, we are seeing SJVN buzzing in trade, bucking the trend and up 3%.
All right, moving on, let's put the spotlight on Infosys then. And Infosys is in focus because of its earnings, no doubt. But what actually spooked Infosys is the stock, not HCL Infosystem. Infosys is among the top losers on the Nifty IT index. At one point in time, if you look, Infosys actually saw a downtick of as much as 4.5%. I will just request my producer to show Infosys, or else I'll just talk about it instead. If you look at the reason why the stock was under pressure in today's trading session is the fact that it announced a price cut in their FY24 revenue outlook. So what they've said is that they've trimmed their FY24 revenue outlook, citing weak discretionary spending by their clients. What they're saying, what a lot of brokerages have come up with their notes. Some of them have gone ahead and cut the target price for Infosys. One of such note is Nuvama, who's saying that the weak exit rate of FY24 would mean FY25 revenue growth is likely to be in mid-single digits for Infosys. They also believe that Infosys is going through some company-specific issues which has been accelerated by weak macros. Also, they're saying they expect the company to underperform the peers in the near to medium term. So that is the Nuvama's note coming in on Infosys. But apart from that, you also have Jefferies, Morgan Stanley, Nomura. All of them have come up with their note cutting the target for Infosys. And Infosys, as you can see, 2.4% downtick coming in for that particular counter. Let's actually hear out what the management had to say post their earnings on their guidance going ahead.
We see the impact in telecom, in high tech, in areas of financial services that we'd shared in the past. For example, payments, investment banking. We see some impacts in the retail sector as well. So those are the ones where we are seeing the impact. Of course, we have other industries, manufacturing, life sciences, which are continuing to do well.
Okay, that was the management of Infosys as well. But let's move on and talk about the next talk on the technicals, and that is Coal India. Now, Dhwani, when you look at Coal India, last 6 months, 35% return is approximately what they've given. Especially in that last 1 month, right now when I'm looking at the chart, that's when that pickup actually came in. What is the view now on Coal India? Do you think this run-up is going to be continuing going forward as well?
Yes, absolutely. The run-up must continue in going further as well. What we are seeing over here on weeklies is where the momentum is just picking up for this counter. The volumes are also, what we are seeing is week on week are increasing over here. One can definitely has a holding into it, can hold on to it and keep a trailing stop loss over here of 298 for fresh entries. Also, this is a good level to enter into from current levels. With a trailing stop loss strategy, one can go into it. 298 is an ideal stop loss. The next stop for this counter comes around 335 levels.
All right, moving on. Let's talk about Zaggle then, Lisa. And why is this in focus today?
Well, just yesterday the stock slumped around 6% on the back of poor earnings, but today the stock is seeing a vertical uptake on the back of order win from Visa Masterworld, and they have won an order from 160 crore from Visa, and this is to issue Forex co-brand cards, and Visa also will be paying incentives on the Forex transactions based on the spending commitments. Well, the contract is spread over 5 years, and what Zaggle's management said that with this collaboration, they will be leveraging their existing customer base and they will be selling the Forex cards to the employees of the corporate clients. Well, the stock which got listed just last month, it saw a muted debut, but then since then it has given a return of around 51% with this uptick in today's session.
Okay. Let's keep an eye out on that one. But moving on, United Breweries is still in focus. I believe this is on a brokerage note, Ashesha.
Yes, Citi has come out with a note where they've downgraded the stock to sell from their earlier buy rating. They've also cut their target price from 1770. They've cut it to 1500 rupees per share. The stock currently trades at 1582 odd levels. The stock, of course, is declining over 1%. Citi says that they expect United Breweries' volume revenue growth to slow down in the second half of FY24. They say continuing administrative challenges, supply constraints and company initiatives to curtail interstate sales from here on, and that is why they have a negative stance on the stock. They've cut their earnings estimates by about 10 to 15% for FY24 to 26 period to incorporate lower earnings and revenue growth from here on. In fact, they've also lowered their target multiple to 52 times 25 EPS versus 55 times, and this is on account of weaker business outlook. So on the back of this downgrade that has come in from Citi, where they have downgraded the stock to sell from their earlier buy, they've cut their target price to 1500. The stock is declining in trade. It is off the day's highest point, sitting with a cut of over 1% as we speak.
All right, moving on, let's talk about United Spirits. Just a quick note for our viewers that you have the HDFC Life numbers that have just hit the exchanges. We will get you the numbers in a short while. But Dhwani, let's talk about United Spirits. How is this one looking on the charts? You had Ashesha talk about breweries, but is the chart very different from what breweries is doing? That is United Spirits' chart?
Absolutely not. What we are looking over here is an uptrend over here in this particular counter. The stock has definitely taken a bottom and support over here at a 50 period exponential moving average, and post which we are seeing positive momentum in this counter. We are also seeing over here momentum coming in from the directional index, which makes it more confirming as a trade. From current levels, if one goes long into it, a short-term target over here of 1150 can be expected. Stop loss that one needs to maintain over here is of 1060.
60 is the stop loss that we are maintaining for the United Spirits as there. But let's move on and also, look at the numbers that have actually been coming in terms of HDFC Life as well. We are seeing that the net premium income for HDFC Life that has come in at 14,756 crores versus 13,111 crores, which is an uptick when you compare on a year-on-year basis as well. Other than that, we also have the profits numbers that are coming in. As of now, the profit has come in at 377 crore rupees. We'll obviously be waiting for more details in terms of overall what is the performance of the new premium income as well. How have they added in terms of that as well? So keeping an eye out on that one. Now on a standalone basis, when you're looking at the profits of the company also, we are seeing a growth coming in on a year-on-year basis. And look at the net premium income, also an improvement on that front as well. But yes, we'll come back with more details on that front. But NMDC, that's the stock that is in focus as well today. When you look at it, why is NMDC in focus today? They are, we're having a couple of notes, brokerage notes that have come in from on NMDC. One is from the Nuvama, where they're maintaining a buy on NMDC and hike the target price to 188 rupees per share from previous 143 rupees per share. They believe that NMDC is actually in a sweet spot, will be catering to the rising demand for the ores as well as with the rising volumes and prices. That will be something that will be supporting the growth for NMDC. Other than that, the firm global prices have been a bonanza for the company, driving up the domestic iron ore prices over the past 2 months, and the cash-rich PSU would also be paying out a special dividend of rupees 15 in FY24, and they expect that the increasing their EBITDA target for FY24 to 23% and for FY25 to 20% to factor in the higher prices and volumes as well. So on the back of that, we're keeping an eye out on NMDC today, also trading with gains of more than 2%.
All right, just some more additional numbers coming in on your screen for HDFC Life. The net premium income, like Vinny had mentioned, is coming at 14,756 crore rupees. That's seen an uptick on a year-on-year basis. If you look at the PAT, it's coming at around 229 crore rupees. It's lower on a year-on-year basis because the comparison is 247 crore rupees on a year-on-year basis. That's HDFC Life number, and you can see the stock is actually drifting a bit lower now after its initial uptick that it had witnessed. The expense of management stood at around 2,927 crore rupees. This as against 2,522 crore rupees. So that's also coming a bit higher on a year-on-year basis. So watch out for HDFC Life right now. The stock is actually drifting lower just now, seeing a 0.5% uptick. We will wait for some more details to come in on APE and the other outlooks of HDFC Life. For now, the stock is trading with 0.5% uptick. But Dhwani, Syngene, how is this one looking on the charts to you?
So in this particular counter, it's time to book in profits if you are holding long positions. The stock is already showing that 850 is acting out as a good resistance on this counter, post which we have seen it falling down. Recently, we have also seen it taking resistance again between 800 to 820 levels, and in today's session, we are seeing a breakdown coming in over here. From current levels, one can go also short on this counter. The near-term target over here comes up at 750, and stop loss that one needs to maintain is of 789 over here.
Moving on now, let's put again the spotlight on one of the IT companies that came up with their numbers yesterday. Post-market hours, HCL type, bucking the overall weakness in the IT sector today. Look at it, 2% uptick coming in, and this is also after the company also went ahead and downgraded their revenue guidance. What the analysts are saying, the HCL Tech's outlook cut is in line with their expectation. Relatively low exposure to financial services sector is a positive coming in for HCL Tech. What Ambit Capital is saying is that HCL Tech tends to be a beneficiary of cost efficiency projects from the clients due to the strength in the cloud and infrastructure capability. So mind you, despite them going ahead and cutting the revenue guidance, just like what Infosys did, you have HCL Tech that is bucking the trend, because what all the analysts are saying, that the cut in the outlook is in line with expectations, and also the performance coming in from HCL Tech is marginally better. But let's hear out exactly what the management had to say when they spoke exclusively to ET now.
This quarter was definitely a very strong quarter across all dimensions of performance. Our revenues grew 1% sequentially and 3.4% year on year in constant currency. Looking ahead, the next 2 quarters, we expect a very healthy sequential organic growth in our services business. However, the market is still a little tepid on the discretionary spend. At the start of the year, we expected the discretionary spend would start coming back, partially at least, but with the continuing macros, the spending has not come back the way we expected. This quarter, as I announced, the telecom, media and entertainment segment has grown sequentially 6.2%, which is a very, very strong growth. We have no contribution from the strategic partnership that we have announced in Verizon, which is going to come from 1st of November as we had announced.
Okay, surely keeping an eye out on HCL Tech as well. And let's listen in specifically what he has spoke to the channel as well on ET Now. You know, that was the press conference where he was talking. He's furthermore spoke about a double-digit growth. That commentary in the second half was very positive what they've given, and that is why that stock up move also what we've seen coming in today as well. So listen into specifically what more he had to say.
I've always been mentioning that in the long term, this is a double-digit growth industry. Technology intensity is very high across all industries. A lot of fundamental business processes would get disrupted with AI, and Gen AI would really have a significant impact. But all of that requires the technology work, the underlying technology work to be done. So I would say long-term double-digit growth is what I'm expecting. But FY25 itself is a little difficult because of the reason there is a lot of volatility in different aspects of the business, right? In terms of how the ecosystem partners are looking at these opportunities, how are the decision makers looking at their own budgets coming into the next year, what are their business priorities, and these priorities also change. So we are really living in an environment where some of the business decisions are volatile. So it's too early to even get a sense of FY25.
All right, so that's what exactly HCL Tech management spoke to ET Now. But let's move on and let's move on to oil and gas space. ONGC, Dhwani, how is this one looking at the charts to you?
Today we are definitely seeing some profit booking coming in over here, but overall the chart structure of this particular counter is very strong. It's been into an uptrend since 2020, what we've been seeing chartically over here. And from current level also one can go long into it. It's more of a portfolio stock that one can add into. From current levels, the stop loss over here comes up at 179 for a target of 195.
Let's move on and talk about Persistent Systems then, Lisa. And why is this one in focus? What's the news flow here?
Yes, it's on the back of HDFC AMC selling their stake of around 2%. It's seeing a slight bit of pressure in today's session. The value is around 900 crore, and with this stake sell, that has lowered HDFC AMC's stake in Persistent to around 3.06%, and earlier in December 21 also they had booked a similar profit by selling around 2.06% stake in the firm, and that had reduced their overall stake to around 5.14%. Well, over the last 1 year, mutual funds has been increasing their stake in Persistent, and in the last 1 year, Persistent has given a return of almost more than around 60%. Well, as we can see, the stock is under pressure, slight bit of pressure in today's session, and also it's in focus on the back of result. Persistent will be declaring their results on 18th October, so that's Persistent to you.
Persistent for you, but let's take a look at what the markets are doing. A stellar recovery underway when it comes to the benchmark indices. You have now Nifty almost breaking into the positive territory. We've recovered over almost 150 points from the day's lowest point. We have actually reclaimed that 19,750 mark as well, inching towards 19,800 as you can see it on your screen. You have the broader markets also trying to make a recovery. In fact, Nifty Bank, take a look at what Nifty Bank is doing, because the recovery in Nifty Bank also is quite steep, quite a sharp recovery coming in for Nifty Bank. There you go. Remember, the Nifty Bank was underperforming the benchmark indices from the word go. Now, right now, in tandem with the benchmark indices, seeing a good recovery, trying to break into the positive territory. So that's the way how the markets are looking like. Good recovery.
Absolutely, good recovery that we've seen coming in. Even from just the start of the show, when you look at it, we're seeing that recovery coming in post 130 as well in the markets. Interesting to see how that's going to be shaping up, because Sensex surely is on the positive side as of now as well. Come up to the positive side, it's a recovery there as well. But let's move on and keep it going with the other stocks that are in focus. And Dhwani, coming to you on the technicals, you've picked out Narayana Hridayala as a stock. You know, how is it shaping up in terms of the technical levels? What is it that you are keeping an eye out on in terms of targets? Last 6 months, 40% return is what we've already seen.
Yes, absolutely. And the stock still continues its momentum. What we're seeing on a daily chart over here is that it's again picking back its momentum, taking a support at a 50-period exponential moving average. And from here on, the stock is looking up and making new swing highs. From current levels, one goes long into it. The first target over here comes up at 1150, post which we can see further run-up coming in this counter. Stop loss that one can keep over here on the downside is at 1040.
All right, moving on. Ashesha, let's talk about Nestle India. Why is this one in the spotlight today?
Citi has opened a positive catalyst watch on this counter. The stock, in fact, is holding up steady movement on the upside. The stock is holding up with gains of nearly 2% as we speak. Citi has maintained its buy stance to 26,500 is the target that they've given on Nestle. They expect Nestle to outperform its consumer staples peers in revenues and earnings growth in the second half of FY24. They say distribution initiatives, launch of 10 rupee Maggi packs, margin tailwind given further price hikes and largely stable input cost environment is what makes them bullish on the counter. So they've opened this positive catalyst watch. 26,500 is their target and the stock is gaining nearly over 2% as we speak.
That's Nestle, but ITC, Dhwani, this one has seen a stellar move in the last 1 year. What are the charts now indicating for ITC? Is it time now to start seeing some profit booking?
No, it's time to add into this stock over here. I would like to go a little defensive in my portfolio, and ITC is definitely looking up as a counter which is making move upwards from here. What we are seeing on a daily chart over here is also positive divergence with relative strength index, and from current levels one can go definitely long into it. Short-term target over here that one can keep into the portfolio is of 470. Stop loss over here that one can maintain is of 440.
All right.
Okay. Okay, Dhwani, next stock that you're going to talk to us about is InfoEdge, Dhwani. Why are you picking up this stock on your list today?
So at this particular counter, it's my advice to the investors that it's time to book in profits in over here. We are constantly seeing the stock falling down. It's moving towards again making new lows over here. So from current levels, one can go short into it. It's a sell opportunity over here. The target over here comes up is at 4,000 and the stop loss that one needs to maintain is at 4190.
That is InfoEdge for you, and indeed the last talk on this edition of Market Fatafat. Thank you so much, Vaishali, Dhwani, as well as Lisa and Ashesha for joining us on the show. And with that, viewers, we wrap this week's edition of Market Fatafat as well. So as always, thank you so much for watching. It's a goodbye from Vinny, our producer Snehi, our director Trevor, and myself Cheryl. Thank you so much for watching. Stay tuned. Closing trades coming up next.